Hi guys, today we are back with another interesting topic, that is risk-return trade-off. Let's break it down. Risk. What is risk? Risk is basically a chance of a loss happening that due to an uncertain event. What is uncertain event? Event that is not in your control. And return. What is return? Return is basically the gain we get from an investment. So whenever you invest your money in something, you get a return from it. You get some money out of it. That is the return. So here we are going to study about the risk-return relationship or the risk-return trade-off and how they interact with each other. Let's dive into this topic. I hope you all have heard this famous dialogue from Scam 1992, risk hai to ishq hai. What does this basically mean? So it basically means is when you take high risk, your returns are also high. And when you take low risk, your returns are also low. Let us understand this with a graph. So here it is the risk, here it is the returns. Now, if I increase my risk, the returns will also increase. Okay, let's understand this with a simple example. So, when you are doing a job, your risk is low, you have a stable income even if the company does make a loss. Though here the risk is low, but your salary is fixed, so return is also low. In the other end, when you are doing your own business, if I'm taking a case of an entrepreneur, he's taking high risk, he's taking the risk of getting bankrupt also. So his risk is high, and that is why he's also getting more returns. His returns are also high. This is a simple basic example of how this risk and return interact with each other. Let's take another example. So back in the day when Amazon was not famous, no one knew about Amazon. So the people who bought the Amazon stock on that day, they took a much bigger risk than the people who are buying the Amazon stock today. So because they took more risk, they have more returns, and some of the people who bought the Amazon stock back in the day are millionaires now. Why? Because they took more risk when no one knew about Amazon. So this is the relationship between risk and return and how they interact with each other. Basically, it's simple. If you take high risk, you will expect more returns. And if you take low risk, you will expect low returns. Thank you so much. Happy learning.